Good afternoon, everybody, and welcome to this edition of our indices, crypto, commodities, foreign exchange. I always get the order wrong. It doesn't matter about the order. It's all the good stuff that we're going to talk about today. So put away your ASX shares, put away your US stocks, and let's get into the nitty-gritty of global macroeconomic finance. My name is Carl Capelingua. I'm the market analyst over here at ThinkMarkets Australia, and it's a pleasure to join you. And maybe you've never traded any of those things, but hopefully I can give you a little bit of a window into how to do it. It's pretty simple, this format today. It's an Ask Me Anything concept. So you've got your little chat window there or your question window. We've also got Khan from ThinkMarkets manning the stations as well. So you can pass any of your requests over to him or me. I do understand that we're not all as au fait with these weird and wonderful things as we could be. So I get it's a bit of a learning process to understand. If you might have a little bit of trepidation about chipping in, please don't do that. There must be something out there, even for your share portfolio, that you're interested in. If you've got a bunch of copper stocks, ask me about copper. If you've got a bunch of gold stocks, ask me about copper. If you just want to know what the market is doing, ask me about the index, because we can trade these things with a ThinkMarkets CFD account. Craig's first in and best dressed. I'm assuming I can't see what he's wearing, but I'm guessing he's looking pretty snazzy wherever he is. And I'm going to head over to here for the crypto, and I need to change the screen. There we go. Not to that one specifically. In fact, I'm in completely the wrong place. So let me head over to here, in fact, and to here. And just the easiest way for me to access all of the cryptos to go to the TradeView station here. And Craig's asking about Link. So I'm going to scroll down my watch list, find Link in here. It's alphabetically listed. Other name for Link is Chainlink, of course. It's the name of the protocol, and Link is the token. Looking for trends first and foremost. So you can see my trend ribbons on screen. If you don't know what they are, I use a long-term trend ribbon system and a short-term trend ribbon system. Ideally, they both match up for a trade. So if I'm going long, I want to see plenty of green on the screen. They will change through a traffic light system to green for longs, amber for uncertain, transitioning between an uptrend and a downtrend, and then pink/dark pink for a downtrend. Not red, because I find it hard to read some of my candlesticks there when things are too dark. So that's the reason why. We can see plenty of amber on the screen at the moment. I do think that the long-term amber trend here, which is therefore indeterminate at this stage, a neutral trend, is covering up a green uptrend. You can just see the outline of the green moving averages there. So short-term uptrend, long-term neutral trend. Now I can absolutely 100% go for longs in a long-term neutral trend if the short-term trend is strong enough. So it's not a matter of I must see a double green on the screen. I'm happy to preempt a long-term uptrend if I've got strong short-term trends, price action, and candles. So let's go to the next step, which is the price action. I like to see higher peaks and higher troughs. Peaks, well, they're just the bits that shaped a bit like the letter A on the chart. So if I was to draw them in here, and I'm not an expert by any stretch of the imagination in drawing on this particular platform, and that's not what I want, but you will get the picture in a second. A peak is there, it's shaped like a letter A, and then the trough is the bit that's shaped like a letter V. So higher peaks means we are taking out new levels of supply as we move up in price. Higher troughs, we are building and building on demand. Demand is increasing. And look, overall, I do think the price action on this is reasonably good. I would say in the medium term, we've got higher peaks and higher troughs, but in the short term, you can see a bit of a downtrend here. So look, I think it's warm. I don't think it's hot. I do like the candle coming in here and the very small response, albeit that last candle is only a few hours old. So it does appear to be holding the dynamic support zone, which the short-term trend zone does offer. You can see clearly it is grappling, however, with the long-term trend zone. And for me to upgrade this to a buy, I think currently it's a hold, happy holder here. I would need to see a couple more white candles, a couple of lower shadows would facilitate a super aggressive entry. And I don't think I'm there on this, given the amount of supply I can see in these upper shadows here. Okay, and the candles are just too bearish. So I'm not feeling in the mood for an aggressive buy. I want to see a test and retest of this upper long-term downtrend zone. That's going to be around about 788. I want to see on any pullbacks, higher troughs. I want to see, so the price action starts to right itself. I want to see lower shadows. I think it will take a test or two of the supply in this zone for us to erode it and therefore have any chance of eclipsing it, of breaking through it. However, when I look up, then I've got another big supply zone here at 9. So assuming with all those things that must happen before I get interested in this, I have enough reward to risk, I might consider a long entry, but I'm a happy holder for now, Craig. Okay, let's head over to Brett's question. Have I published my trend ribbons on TradingView? No, I haven't. And probably won't, to be honest. So unless there's some sort of commercial benefit to doing so, there you go. Maybe there is. I don't know. Maybe I'll investigate it in the future. But right now, I'm happy just to keep those to myself. Colin asking, can we have a look at the gold chart? Certainly, Colin, we can have a look at the gold chart. Super interesting here at the moment. I did a tweet yesterday on gold specifically saying it had reached a really important technical level for me, and it had put in a very interesting candle, which I felt could facilitate a bit of a bounce. Okay, and the candle I'm referring to, in fact, I won't go there. Well, don't worry, I'm coming back. We're going to go here because I've got all my scratchings on this particular chart. And if you're wondering what technical analysis package this is, it's Amy Broker. All the charts exist on our web trader app as well. However, just in terms of drawing, so I can facilitate these sessions and make them as fast as possible, I'm more familiar with drawing in this environment. Okay, that's the only reason why we're here. Now, this is the candle I was referring to, which is this one here. Okay, and the long lower shadow, we talked in the last example on Link, the types of candles I would need to see, and that's a great case study there. So the long lower shadow, the high-ish close, preferably it could have been better, but coming in at that long-term trend ribbon, which is where I expect to find dynamic resistance. Why? Just because it happens over and over again. You might think, why there? I mean, it's just nonsensical for that to be the level, but lo and behold, that's where it bounced from today. Okay, or yesterday. Reasonable follow through, but it could have been better. That upper shadow tells me that there is some supply exactly where I expect it to be at 1848. We've got a previous little peak here. A peak is a point of supply. There was overwhelming supply there in the past, at least enough in the short term, to overwhelm the demand that was in the system and give us another short-term leg down. So if there was supply there in the past, why wouldn't there be some supply in the future? And it is manifesting itself. Okay, it's just a theory that supply is there. What we need to see is if it manifests itself. And the way it does that is through black candles or upper shadows. And we're seeing a little bit of an upper shadow in that area there. So yes, I fully expect, along with the short-term trend ribbon, there to be some dynamic and static supply here from 1848. And it's just a little bit of a wait and see. Doesn't mean we have to pile back into shorts for the next leg down. I'm not so sure that's going to happen. I think there's a very good chance this will hold, but I need to see confirmation first. And I know people get frustrated. Hey, Carl, you always seem to be waiting for a couple of candles. Yeah, that just depends on what chart you ask me to look at. Sometimes the chart's ready to go, and I will put something very magical on the screen. And I'm only going to do this now to show you what that thing is, and then I'm going to delete it. But something like that, I will often do that. So I know if you're frustrated that sometimes I need more confirmation. Well, that's just the nature of the beast, isn't it? And I tell you what, to get to this point where I'm happy to add a third, I would need confidence. Hey, we're not just getting in for the sake of getting. I want to see how supply goes here. If we get a couple of candles, maybe even a little bit of a peak formed, and then we want to see that push through. We don't have to see it push all the way through. Simply a close above that level would be fine, and the high of that is going to be about 1853. So close above 1853 with the right candles. You might even have the ability to go a little earlier if you see something like this, and the people who have watched me long enough know exactly what type of candle I'm going to draw. It is one of the two demand side buddies I need to see to get me into trades, long trades, to give me the confidence that there is demand coming into the system. So either that one, I know it's a little bit skew if given my limited drawing abilities in this particular platform. and something like that. So you might have on one of these candles the ability to go earlier than a close above 1853. But this would be a pretty picture for me to say plus 1/3. And it is highly speculative because this is a turnaround play we're betting on within a long-term uptrend. Okay, so that's why we're not jumping in with a whole position at the start. We could add a third if we saw maybe one of these candles. Okay, we could add another third if we saw one of these candles. We could add another third and have a full position by the time we got to 1853. Even then, that's a little bit aggressive, isn't it? Target's probably back into 1891. Now, that's the bullish scenario, and we should discuss the bearish scenario because we do have a pretty well established long-term downtrend. And it's pretty simple for me to draw them because if in this zone we don't see those candles come in, if in fact we see something like this, okay, then we will have the ability to enter shorts. Okay, we don't have to always be thinking that gold's going up. We know it doesn't. We know it can go down for protracted periods of time. So if we saw either of those candles, in fact, we'd be looking to add a third, not to the long side, but on the downside, adding a third potentially if we saw this candle with the upper shadow in and around that pink zone, adding another third if we saw the confirmation through the black candle, and then adding another third again if we closed beneath that trough low there, 1804.20, but maybe even for safety, that low there, 1802.8, which is the bottom of the long-term uptrend zone. So there you go. You've got every possible scenario coming out for gold, and extrapolate that back to your gold stocks if that's what you like to do. Let us go now to H Fernando, and I'm going to call you H Fernando. I know the H stands for something. I don't know what it is. Maybe you can tell me because only I can see it. Then I can stop calling you H and call you whatever your first name actually is. And I understand that when you register, you put your initial in and you can't really change it after that, can you? So let me know if you would like. And now the question is, hi Carl, is it too early to go long on US natural gas spot? Looks like it is turning. I know this is the quote unquote kamikaze trade that we're looking for, but we're not just going to jump in simply because something has come down a lot. I think that's foolish. In fact, I'm going to go back here where I have my scratchings. And natural gas, obviously, we had the big run up on Russia versus Ukraine. Then maybe there was something to do with fears of how things would go in winter. It turns out things didn't go so bad. And we've gone from $10, right, for a million BTUs or whatever it is, equivalent, whatever that stands for. I don't need to know it to trade it, honestly, to under 2. So we've seen 80% of the value wiped off. And, ordinarily I would say, look, don't try to catch the falling knife. However, hey, commodities overshoot, don't they? They overshoot to the upside, they overshoot to the downside. So for me, something that's come down that lot, it does get me interested in what I call the kamikaze long trade. But I'm not going to just jump in and, hindsight would suggest I probably should have just jumped in at $2. I'm not going to do that because I want to see this. The trend is too strong. I want to see a bit of confirmation first before I do. Ultimately, we were waiting for 144, 144, there it is, which is the big low. And if I scroll back, you'll see here, this is the low from the 25th of June 2020, which is the post-COVID low. So we can see prices through the pandemic really got dumped, as with many energy commodities. And I think, and I felt that that was the pivotal low. There's also one there at 179. As it turns out, we didn't quite get there. Not to say that we can't. The question from H is really about where can we buy it? Okay. Well, not far different from gold, to be honest, but please understand this is a really aggressive trade. We are still very much beholden to the short-term downtrend, which is in here, and starting to impede price rises. Okay, so price is being impeded to the upside as we would expect. Long-term trend is still very much down. Okay, so for the kamikaze trade, I would need to see at least a higher trough, right? So we've started to make a little push higher. Great. Let's see the higher trough, and that might be into something like 250. And when we can see it coincide with, some roundish numbers, that's always good. And then preferably in this light green zone, we see the candles that we discussed from the last example, those demand buddies, I call them. And then it might be the case if you saw a really strong one in here, you might go plus 1/3. And we're just having a tickle at this one, ladies and gentlemen, because the trend to the downside is so strong. Okay, we're not jumping in everything. And only as it starts to prove itself, could we possibly then add another third, and then maybe, I don't know, somewhere down the track we get the chance to add the final third, or even beyond that. Okay, so to answer your question, I don't think it's there just yet. We've got a promising rally, but let's see how the supply side responds. Is there a supply side? Are they powerful? Hey, look at the chart. Of course they are. Let's just see how they respond, and then let's see how the demand side responds to that. So it's one of those we're going to have to wait for a little bit more price action first. Barry's asking about the US dollar index. Really, really important. To understand the US dollar index, how about we head over to our bond market? Okay, so we'll have a look at the US 2-year notes here. This is the yield on the 2-year Treasury note. You can see it just piling higher, isn't it? No respite there for stockholders. These two charts here are exactly why your share portfolios are in the toilet, ladies and gentlemen. There is a 100% correlation between the toilet and bond yields for your stocks. Stocks love lower bond yields, which means lower market rates, okay? They don't like them when they go up under typical circumstances. I know if you go back far enough, you'll find a time where yields are rising and stocks are rising. That tends to be when we're coming out of recessions. I don't think that's the case right now. Okay, this is, yeah, we're still got a bit of a ways to go on this one. I was going to say something else. I'll save that for another day. So bond yields continue to move higher, and that facilitates a higher yield on the US dollar. Interestingly, we haven't seen it over the last couple of candles. Okay, so it's not a chart I've looked at in the last couple of days. So I'm surprised, actually. I was assuming that would be powering higher, and it isn't. So that's very interesting. We are finding some supply in around that 105, 106 zone. Okay, so what does it mean then when those yields are heading higher and the US dollar isn't? One scenario where that could happen is where there's a bleeding great big recession coming up in the US economy. So yes, yields are higher, but you're not necessarily piling into US dollars because you're worried that inevitably yields will be lower, plus returns on your US assets are going to be lower, like stocks, and you might be selling stocks and therefore selling your currency as well and repatriating. Okay. Don't know if I need to say too much more than that. I mean, we are at a key level of supply that we've discussed in the past. That's through here, 105, 106. If we get above that, I think 108. I have discussed the prospect of failing here. The candles are warm for a failure here, but not hot for a failure here. There's a little bit of a lower shadow last night, and we do see that the short-term dynamic zone might kick in around here as well. Okay, so neutral. Okay, long-term trend is neutral, and the short-term trend is barely established. So let's just call that one neutral for now. I'm not sure how that reflects back on the ultimate reason why you're asking the question there, Barry, but yeah, I'd be foolish to make a definitive call one way or the other on the technicals that I have in front of me there. Sue asking a sort of a general technical analysis question. How do I use the RSC, is it relative strength comparison? It is relative strength comparison. Oh, and you can see it on screen. There you go. It's not something I normally talk about. Probably not really relevant in these particular sessions. They're more relevant in our ASX sessions and then possibly in our USA sessions. But what we're actually looking at here is the comparison of the security on screen to, let me double check that it is, in fact, the ASX 300 is my target. It's the all ordinaries. It's off screen. You can't see it. That's okay. That's the guts of the formula. I don't want you to see it anyway. This is a proprietary indicator. So there are RSC indicators out there. I don't use those. I've literally constructed my own. It's my own preferred method of calculation. But we're comparing the performance of the asset on screen to the all ordinaries. What's the point of comparing the US dollar index to the all ordinaries? There is no point. It's nonsensical. It's just a legacy indicator I have on my screen so that when I look at my stocks, for example, let us go to BHP, first one that comes to mind. We can see how BHP performs against the All Ordinaries Index. And typically we want to be buying BHP when it is outperforming, be a little bit more skeptical when it starts to outperform to a lesser degree, and then be very skeptical when it starts to underperform the ASX 200. Okay, so you can almost use this as a trading indicator in itself. You can see here the impact, the power of the dark green zone. How about that? X marks the spot. Just nailed that one right there. Very good. How do I use it? So I think I've explained how do I use it. Unfortunately, I haven't given you how to calculate it. I've got to keep some things up my sleeve. From Colin, Carl, there is talk of copper as the next big thing. Yes, I've heard a little bit of talk about copper being the next big thing. Let us head over here to investigate the chart. And we've got high-grade copper on screen. A pretty good 3-day rally. Very surprising for me because I felt that this was a really powerful move to the downside. It hit support, it bounced. I was wrong. I do get them wrong from time to time. I just felt with 424 below 426, supply was building. I felt with the magnitude of the candles, there was a case to move. And quoting myself here, back to neutral. That's all I said. I didn't call for shorts. Go check the tape. I said we're moving more to a neutral stance on copper. Pretty good bounce. 3 decent candles, decent demand side candles. Back above 410, not taking out 424. I think to get more bullish on this, I'd want to see it take out 424. I just think neutral is the best place to be right now. So you can see short-term trend is neutral, long-term trend is neutral, and they're really starting to flatten out. The candles really are indeterminate. We've got just as many whites as blacks. Maybe there's a few more blacks, but the white ones, when they do come in, they are powerful. And I don't think I can give you much more than that. Look, that's a fairly short-term view of copper. The way I can give you a longer-term view is potentially to have a look at, say, a weekly chart. So let's go weekly chart on that. It does change things a little bit, and that's, I think it is constructive to look at long-term charts from time to time. And to do that, you can either zoom out a really long way, that tends to squash up your candles, or just simply flick a switch and go to your weekly chart. It's looking pretty good actually on the weekly chart. Now, this week is not finished. Obviously, tomorrow's close will determine the nature of this candle here. But at the moment, the candle's looking very solid to undo the damage of this candle here. And you can see actually on that candle why last week I went back to neutral. In fact, if I saw that, thinking that looks very bearish. Looks like a total rejection here. Of higher prices. But hey, if this week can hold on, and there are some fundamental factors that have occurred this week, which I could not see last week. I could not know that the Chinese manufacturing data would be so strong. Record advance for a data print, and then at 10-year highs. I couldn't foresee that. But that does change my view a little bit on the fundamentals. So yeah, that looks like holding the short-term uptrend zone. The long-term trend is still up. I know it had a bit of a challenge here, but it still looks fine. So in the long term, copper prices are fine. Let's see how tomorrow's close go. And then in the short term, we can say it's more neutral. Okay, so we're getting a bit of a view of how some of those short-term and long-term views and trends can alter. But whilst we're short-term neutral, I think you can be a long-term holder. Okay. And again, extrapolate that back for what you feel about your copper stocks. But I always say, and you've heard me say this in these sessions before, and I'm filling, so I'm trying to find the place to find it. There it is. I always say that if you are bullish on copper, right, it's nonsensical to go out and buy a bunch of copper shares, because ultimately they will face costs, and higher costs at the moment, higher labor charges, shortages of labor, natural disasters, floods, mining mishaps, breakdowns of machinery, management, embezzling funds, all sorts of possible things can go wrong with a company. If you've got a view on copper, this is the best way to do it. Just go and buy bloody copper. So if you're looking at the long-term chart and you think, look, I'm not fussed if I get in at 414 where it's trading right now, or I'm getting at 4, I might wait for it to buy it, or 420. I'm just looking to buy some copper and hold on to it for the long term. This is how you do it. This is the ThinkMarkets web trader platform. You can see all the charts we saw before, and you've got the ability to do various drawing on it as well. And if I'm looking to trade, I literally just click that button. I decide how much I'm going to trade. I'd like to go for the minimum amount, which is usually the default setting. So 1,000 is the default setting. And to figure out what that is, you have to go back to the contract specifications. I don't fuss myself with what it represents in how many pounds and things like that for this. This is dollars per pound. The contract is priced in. All I care about to me is, well, what does it mean to me in Australian dollars? And that's what this is here. So as I increase this, you can see that each pip costs me an extra dollar. What was it? $1.48. Okay. And then I can, through here, and this is just the way I like to do it, I can start to feel, well, if I think copper's going to $6 a pound, and in the worst case, look, if it gets below, say, 380, I'm going to bug out. I'm risking $500 to make $2,700 for 1,000. Now, if I wanted to change that, I can change that in multiples depending on how much I wish to risk. Okay. I think that's the simplest way to do it. If I think it's going up, I'm going to hit the buy button. Somewhere down the track, I'll need to hit the sell button. If I think it's going down, then I'll need to hit the sell button first. But I don't think the technicals warrant that at this stage. Let us head back to the charts, and we're going to look at lithium for Craig. And I was just called in to provide some commentary on the call on Ausbies a few minutes ago on lithium. So if you were watching that and have now tuned in here, I discussed a couple of charts. So this is the first one I think we need to talk about, and it is specific to the news, which is out. There we go. There's the weekly chart. Look at that. That's the weekly chart of lithium carbonate. And I think there'd be so few Australian investors out there holding lithium shares that even know that that's happened. They're just watching their lithium shares go down, thinking, look, in the long run, EVs are going to be great. The world needs more lithium, therefore I'll hold on to my lithium shares. Well, in the short run, commodity prices can and will be extremely volatile. They always are. And this is how commodity cycles work. You know, you've got a prolonged downturn period. Look at this. Yep, nobody wants lithium, nobody needs it, and we stop looking for it. We stop finding it, we stop bringing it to production, and then all of a sudden we decide we need it, and there's not enough around, and then prices go berserk, and then everybody decides to look for it. Some of them find it, and some of them again start to produce it. That supply hits the market, and then demand is met, lo and behold, and therefore prices must come down or moderate at the very least. This one is more of a come down. If you look at the news today from the big Chinese supplier here, so they're supplying battery materials to EV electric vehicle manufacturers. So it's one of the big battery suppliers. They're offering significant discounts. So CATL is the acronym for the company. Don't make me say the full name. But they are offering substantial discounts. This news came out last week to EV manufacturers on the basis that their costs are coming down, on the basis that they think there's going to be a significant continuing decline in this contract here, which is lithium carbonate in China. And they also sold their stake in Pilbara Minerals today, and actually earlier in the week as well. So they completely got out of their stake in Pilbara Minerals. So what does that tell you? These guys are the closest to the coalface as possible. I did want to go to the weekly chart and show you that as well. And look, this will bounce. Make no mistake, this will bounce at some stage. The question is, well, where does it stop? And it's just in a precipitous free fall. So until we get a bounce, we can't even start to say, well, demand is starting to build back up again. Okay, so it's just a be out. Why would you want to be in something that's looking like that right now? And then the most scary thing is the next chart, which is lithium hydroxide. Lithium hydroxide can be refined from lithium carbonate, but it's closer to your precursor material for your electric vehicle battery. And this is the break that we've been watching for and waiting for a long period of time, and we have finally broken through that 73. And I do think that lithium hydroxide will go the way of lithium carbonate, and then that is now starting to have your ramifications for your spodumene producers, your Australian hard rock producers, and obviously that is for your lithium brine producers like your Allchem in that boat. And then you've got your Pilbara Minerals, your Cores, and your Liontowns in that boat there. So hey, I hope I'm wrong. I could be wrong, and maybe this is your buying point. This is the point where lithium bottoms and it goes up for the next 10 years. I just can't see the future, but all I can do is follow the trend. That's the bottom of the list for requests. Actually, there's one more here from Jai asking for a view on the Australian dollar versus the US dollar. Let me head back to my candlesticks. a little bit like gold, we're seeing a bit of demand come in. 66.86, X marks the spot. You know, it's kind of a level that we've been talking about for a couple of weeks, and certainly since this big black candle caused me to shift my bias from long to short literally overnight. That's how accurate, how quick candlestick analysis can be, because if you just focus on your trends, look how long it takes for trends to change. It takes weeks sometimes for a trend to change, and yet when you get the right candle, it can just flip your bias just like that. That's how powerful candlestick analysis is. So we are looking for candles the other way. We're looking for demand side candles. We're looking for convincing demand side candles. And they would be the candles with the white bodies or the long lower shadows. And there's a little bit of demand here because there's a little bit of a shadow. There's a little bit of demand here because there's a little bit of a white body. In fact, there's also a little bit of supply. So if there's a bit of supply and a bit of demand, we call that indecision. And I haven't updated these yet. That long-term trend is actually flicking back to the downside. So you can see that when I prepare my charts for you, there's actually quite a bit of work that goes into it because I have to move these around. I have to change their color. You can't see what I'm doing, but trust me, this is what I'm doing over here. So that will change color. And this one actually has gone to light pink, and I won't change that one, but it gets hard to select it once they overlap. But you can see how that works. So this is going to be the big supply zone. That's what I'm after now. And we're watching for the shadows in there. So we see those upper shadows. That's telling me supply is overwhelming the demand that's coming in from the bounce. And the black candles in there would tell me that we're probably setting up, we're gearing up for some more shorts. So when I see those in there, I'm probably looking to enter shorts and then targeting at least a move back to 67. But yeah, I'm not so sure how much is left in this. I mean, there's plenty of demand through that sort of 66 to 65.80 zone as well. So it's also possible maybe the best of the trade is gone. And that's why you really, I think, have to wait for a bit of a rally through here so that you've got some reward before you hit this big demand zone again. Okay. I know some people like to trade intraday charts on many of these products, and you can do that. If I head back to the Think Trader app, you can select, you can see I've got 1 day selected. I can't do that on my AMI broker, but I can select, here. I can go to say 4-hour charts are very popular. You're just getting more signals basically than if you're trading daily. All of my technical analysis still works. You're applying the same concepts. Okay, there's a big supply side candle coming in to break this trend. Big demand side candles coming in to perpetuate the trend. Okay. But look, it's not my style, and that's why I don't talk about it. But if you've got a view on one of the lower periodicities, we call them, I'm happy to check that out for you. But just for me, I'm an end-of-day trader. That's my trading style. Everybody really should think seriously about adopting a trading style that suits them. And end-of-day trading suits me and my ability to look at the market and how disciplined I am. I find that when I look at those intraday charts, I lose a bit of discipline as I get too excited. Kid in the candy store. There's too much to trade. And too many lower periodicities you can go to. Okay, well, that's all the questions we have for today. I'm going to sound out your last chance to throw maybe 2 or 3 in, and we'll do those because we've got a little bit of time left. Plenty of people here today. I know a few people, again, sort of just getting into commodities trading might be a bit shy, but maybe Jimmy, you haven't heard from you today. Hanelli, haven't heard from you. Glenn, Des, David, calling you out. Must be something you're interested in. Got to give you 10 more seconds. Okay, here we go. How's the euro dollar going from Barry? Let's check it out. I need to head over here to forex because I don't have it in my my favorites watch list there. And we're going to go to EURUSD, which is down here. Oh, that's it. That's a really nice bounce, isn't it, off the long-term support zone there, and a really solid close. So this is reflecting that weakness in the US dollar, the fact it couldn't push through 105, 106, pure coincidence, about 105, 106 here as well. Isn't that interesting? And of course, if the US dollar index was going to trade 109, 108, it would coincide with 104, 103 here, because there'll be an inverse, bit of an inverse relationship, I guess. I think it looks good for a bounce. How confident am I in adding a third? Yeah, if there's enough of a deep breath and a pause, it's probably not confident enough. look, I can certainly see, so I can see supply in here. So this is what I see. I can see the shadow here. I can see the shadow here. I can see the demand points sort of here, here, and here, and an attempt here to hold. So I expect that this is going to be a supply zone that I don't want to mess with too much. And look, I'm happy to add risk if I see reason to, and I'm not sure if there's enough reason to add it just yet. So I think we need to deal a little bit more with that supply zone. I think we need to see another couple more candles. So I don't think it's something, well, I'm prepared to punt it simply on the basis that it's going to bounce off that line and just keep going up. I'd prefer probably to see an interaction here, and then maybe from there. And if we saw then, something good happen in here, then I might be more interested in adding some risk, but not until then. But I can, this candle here does facilitate, looking at that, a similar candle there, it does facilitate, can facilitate a rally. This was much a far milder pullback before we saw this. Okay, this is a more severe pullback before we've seen this, and then this is kind of explaining the confirmation that I need to see before I get too excited and have a punt on this one. I'm not feeling it right now, Barry. Okay, neutral at best. I've got a bunch of other ones here, so we're going to go to now the JPY USD. Actually, not the JPY USD, the USD JPY. There we go. That's the way we normally would put that in. So for Craig, we normally look at it the other way around. Okay, and it's just convention that we would normally look at this one, the USDJPY, and in the other case, we looked at the EURUSD. Okay, it's just convention. There's probably a good reason for it, but I'm just going to call it convention because it is. We should be expecting, I guess, some weakness in this because the US dollar has weakened, but clearly not so much against the Japanese yen. This trend looks quite good, actually. We can see that this is reasserting itself, that long-term uptrend. We can see the short-term trend is pretty good. The candles are actually quite convincing to the upside. And even with that broader weakness in the US dollar, we're actually seeing some demand come in through this candle here. So I'd be quite happy to maintain long positions on this. There may well be a bit of supply, however, coming in here. I know this is frustrating when you can't get clear-cut trades, but I don't make the charts. But happy to maintain longs. If I had them, would I be taking longs? No, I don't think I would be because of the uncertainty stemming from this point of supply here. Okay, let's see how we deal with it. I know I'm a broken record, but you know the things I like to see. I'm patient. If anything, I'm patient. I'm happy to wait to wait for the market to build the case for me to add risk because money's hard to come by. I don't know if anybody's noticed, and I don't like to let it go flippantly. Okay, iron ore. Let's have a look at this one. Back to my macro list, my favorites, and we're going to go iron ore. I'll have a look at the Shanghai contract. As good as any. I think it's closer to the ground than what's happening in Singapore, and it looks very good. Obviously, the PMI data helping out there. I'm going to go ditto on the last time we talked about it. The trend is very strong. Short-term trend is very good. Long-term trend has established itself to the upside. Couldn't see anything so sinister in the candles to suggest that that will change anytime soon. So happy just to trust the trend, but understanding also we've got a big major point of supply, not far away up here. But for your iron ore companies, really there's nothing to worry about here. It all looks pretty good. And we saw that chart of BHP, didn't we, bouncing off its long-term trend zone as well. So pretty happy with that one. Energy sector, that's probably a bit broad, Sue, but I can certainly look at the energy. I can certainly look at something like crude oil, and we can say that it is still stuck in a range. I'm going to trust the long-term trend here and say that the more likely break is to the downside. However, it's so sideways now, I could be wrong. Something's going to go sideways for that long. The market is so well balanced that it wouldn't take a great deal to tip it one way or the other. Okay. But yeah, there's nothing so wonderful in there to suggest that this is going to break out anytime soon necessarily, and that that's going to be great for your energy stocks, for example. If anything, I trust the broader trend, but happy to be corrected by the market. Hanelli's got Dash. I like that. Let's go check out Dash. So we're going to head back to here and here, and I'm quite certain we'll find Dash on the ThinkMarkets platform. I know that's maybe I'm putting myself on the spot here, but there we go. Dash cryptocurrency. There it is right there. So we can trade Dash. Still one of my favorite cryptos. I know we're looking at it there on the hourly chart, but the trend there on the hourly chart is still good. Let me head over to the daily chart, which I know is very, very good. No complaints here. Happy holder if you've got it. If you don't have it, I can't see why you couldn't add some risk here. Maybe you want to wait for a close above 75 before you do. But yes, the trend on that is extremely strong, and I see absolutely no reason to doubt that trend at this point in time. So happy holder on Dash. And we will have a look at uranium, and then let's adjourn for the day. So heading over here, uranium, unfortunately, I wish you could, but you can't trade it on the ThinkMarkets web trader there. It's not the most liquid of contracts. You can see there, really all we're getting is an afternoon close, isn't it? A PM fix on uranium. So to see the chart properly, I can't look at candles. I don't have candles here. All I've got is line, and we've got lines that are really flattening out there in the short term. That's the light green zone, and pretty flat also on the long-term trend, which is the dark green zone. So nothing exciting going on in uranium, unfortunately. Not to say that there aren't a bunch of exciting things that we can get up to over here with ThinkMarkets, because I'll be back tomorrow, that is Friday, at 12 p.m. Note the slight change in times there from 1 to 12 to have a look at your USA stock portfolios. That's going to be lots of fun. Fundamental and technical analysis, plenty of learn to trade as we did today. If you're watching on any of the streams, in fact, I just saw Hoozle Finance, sorry for this, but I should have looked over, and Hoozle Finance, such a big supporter, has asked about the Nifty 50. So I know I was mid close there. Nifty 50, let's have a look. And not looking great, is it? It's much like many of the other major global stock indices, under a lot of pressure and breaking its long-term trend. I know that last candle there is giving us a little bit of optimism. It is a decent candle, gapping up from the previous candle's close. Short-term trend very well established. I mean, there's plenty of reasons to be bearish here and not many to be bullish. Hopefully it can get back in here and start to put in some higher troughs and maybe turn this around, and hopefully, much like sort of here, hold on to this long-term uptrend and continue to go up. I would suggest if it does break beneath, say, this low here, that low is 17,250, then it's looking very dicey, and then beneath here, it's back into bear market territory. So buy, hold, sell. Oh, I'm struggling to get to a hold. It's very close to a sell, and buy is completely off the table there until we get more data, more signs that demand is coming back in. So hopefully you caught that one. Hoozle Finance before the switch to the sign-off, which was mid-sign-off. The rest of it says head to www.thinkmarkets.com/AU webinars to register. I do tend to look at the Zoom questions more, that's all, so that's the advantage of being in there. If you're not a client of ThinkMarkets, you definitely should be with other good guys in the Australian broking scene with everything you could possibly need and want to trade. If you're managing a self-managed super fund, do it with us. $8 flat rate trades, a fraction of the price of your big brokers. Chess sponsored as well. There might be a cheaper rate out there, but they are going to be with the fly-by-nighters. You will not get Chess sponsorship, and you won't get the customer service and range of products that we have, because you can trade all of the other things that we talked about today, well, most of them anyway, on our CFD platform, market-leading spreads, commission-free on shares. Head to www.thinkmarkets.com/AU for details. We are an award-winning broker, multi-asset platform. That's what I was trying to say. Dedicated account manager. You can speak to us. If you liked what you saw today, hit the subscribe button on whichever platform you're listening on to keep informed of my updates, which are regular through the week. And of course, hit the like button. So important to let us know you like what we're doing, so we'll continue to do more of it. Apart from that, it has been an absolute pleasure chatting with you today. All the best for your trading and investing until we catch up again. But as usual, before you go, I'd like to talk about the disclaimer, which says that everything we've talked about today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, please consider it carefully or seek the help of a financial professional. There's lots more to learn about ThinkMarkets and our products, and you can do that by downloading our product disclosure guide, our PDS, which is available from our website.